you. Welcome, mayors. My name is Stacy Fujii with the African American Mayors Association. It was an absolute pleasure to meet most of you in person during our 2023 conference in Washington, D.C. last month. We are pleased you joined us today for the first virtual May session of the 2023 Economic Mobility Leadership Institute. After today's session, we will meet virtually just 2 more times as a cohort. Then you will be released to implement your strategic plans that you have carefully crafted. By now, you should have heard from the ALMA team regarding your strategic plan. Thank you to the cities that have submitted your plans. Those cities include, let's see, we've got, let's see, New Orleans, we have Beverly Hills, Missouri. We have Birmingham. We have Miramar, Florida. And who else am I forgetting, Darian?
Did you say Houston?
And we have Houston's. So for our cities that have not submitted them yet, please get them in no later than the close of business tomorrow. The ALMA team is currently reviewing the strategic plans, and we will return your drafts to you with comments. Should you have any questions, please feel free to reach out to me via email for the quickest response. Now, it is my distinct pleasure to introduce our Director of Policy and Programs, Darian Vason, for the welcome.
Thank you, Stacy, and welcome mayors to EMLI's Land Usage and Appraisals While Black session. It is a pleasure to see everyone again, Mayor Cantrell, Mayor Jackson. It's a pleasure to see you all. ALMA's Economic Mobility Leadership Institute is focusing on critical learning opportunities for mayors and their teams with the goal of creating strategic economic mobility plans to implement in your respective municipalities. From the December 5th, 2022 report, Brookings estimates the median appraisal is 15% lower in majority Black neighborhoods compared to homes in neighborhoods where less than 1% of the population is Black. And the cost of evaluation across the 113 metro areas in the US with at least one majority Black neighborhood is $162 billion. Our hour-long session will provide insight or data as well as share necessary and helpful tools available to develop a greater opportunities for wealth creation and retention in your communities. Now I'd like to turn it back over to Stacy.
Thank you, Darian. So we will begin today with a presentation from our partners at Wells Fargo. Then we will follow up with hearing from our friends at NARAF and then the KKAC Foundation. Please remember to use your chat feature to ask questions throughout the session. Without further ado, let's begin. Since 1852, Wells Fargo has served generations of customers and helped people go further. Today, we are joined by Mr. Wayne Willoughby, Executive Vice President and Head of Business and Real Estate Services at Wells Fargo. Please welcome Mr. Willoughby to the Economic Mobility Leadership Institute.
This is Jessica Wagner with Wells Fargo. Wayne is actually having a difficult time connecting in his room. So Mike Munley has joined. He can take it until Wayne is able to connect, if that's okay.
Okay. Well, Mike, we appreciate you stepping in for Wayne. Welcome to the Economic Mobility Leadership Institute.
Thank you very much. Thanks, Barry, for the welcome. Everyone has the presentation Wayne had prepared, is that correct? It is perfect. Okay, let me turn on my video. So if we can start on page 3, we're going to do a really quick appraisal overview to level set what is an appraiser and license structure. So an appraisal can be defined as a reasonable opinion of market value. Oh, I'm sorry, I'll wait till Darian shares her screen. Perfect, thank you very much. So an appraisal offers a reasoned opinion of defined type of values as of a given date. So typically when we're talking about residential lending, you're talking about market value. So market value is going to be defined as the most probable price which a property should bring in a competitive market, given buyer and seller are both acting in their best interest and there's no undue influence in the market or undue stimulus. The appraiser's opinion of value is based on research in the appropriate market time periods and applying appropriate techniques as defined, typically by USPAP. But again, it is an opinion of value. So you will see opinions vary as you go through appraisers. So two appraisers can approach a property and reconcile to a different opinion of value, even given similar market conditions and similar comparables. Wayne, I see that you just joined. Do you want to take over?
Sure. Hi. Thank you, Mike. And I apologize. I was having some technical difficulties. I'm at an offsite in Minneapolis and struggling with the technology in this conference center. I apologize. So good afternoon to all of you. And I'm honored to have an opportunity to discuss what we do in our organization in an appraisal business. I'm Wayne Willoughby. I think you have some background on me, so I'll dispense with the introductions. But so what I wanted to do today, based on some feedback I received, is kind of set the landscape around what's happening in the appraisal industry, and of course the very hot and sensitive topic on appraisal bias. Can you see me? Actually, now I'm having a problem with the camera. Let's see, maybe you could see me. There you go. Is that better? Okay. So as Mike was sharing, a couple of kind of foundational things in terms of just setting the landscape. What's an appraisal? An appraisal is a reasonable opinion. And the reason why we put these sort of basic definitions here is it's a little bit of art and science combined. So when we think about consistent accuracy across this industry, it's something we work hard to try to ensure, but it's subjective, to be quite honest, in terms of what an appraiser may pull as a comparable and so forth. And the market value is really all conditions that make it marketable and saleable. And depending on the neighborhood, that can add or subtract from the appraisal value. Another foundational point I'd like to raise is that the requirements around becoming an appraiser is really anchored to each individual state. So, the state licensing process, while very similar in nature as you go state by state, there are different requirements in terms of eligibility, including the need to have a college level degree or a college level like education. And this unknown concept or reality that a lot of folks don't really know about, there's 1,500 to 1,800 hours needed for an apprentice that's an aspiring appraiser to be connected and working with a senior appraiser in the industry. This is a very, very important point. That today in the marketplace, there are about over 30,000 licensed appraisers, less than that sort of active. But in order to become an appraiser in any state, you need to have this apprenticeship. Now, there's no incentive at all in today's market, and I'll talk a little bit about what we're doing to change that. There's no incentive at all today for a senior appraiser to adopt or to accept an apprentice. There's no compensation. There is no quid pro quo in terms of a volume may come to that person. And if you think about it, a senior appraiser has to take time from their schedule where they could be making money with a new appraisal. They're now shepherding an apprentice and having to sign or co-sign on work that an apprentice does, taking on some obligations and risks. So what has happened over the years, and when you see the data that's shared, is that it's become somewhat, I use the term loosely, so sort of incestuous. The only reason why I would do it and accept an apprentice is a relationship. So family, friends, community. So there is there's been a natural built-in tendency to have folks in the appraisal business that look like one another. Right, so hopefully that makes sense. And as I go forward, you'll see what I'm referring to. All right, so if we go to the next slide, I wanted to share with you the ecosystem. And this is how the appraisal industry is structured in terms of licensing and oversight and policy. So there are three pillars, you may say, or three concentric circles. And if you look at the center, you have the appraisal subcommittee. That's really the regulatory bodies, as you see broken out to the left-hand side, including the OCC, FHFA, you've got CFPB. They're sort of the governing bodies on the regulatory arm. In the blue, you've got the Appraisal Foundation that's responsible for USPAP, which is really the Uniform Standards for Professional Appraisal. So they kind of set the standards and practices. And then below that, you have, in concentric, you have the states that have their requirements around state licensing and the requirements to become a licensed appraiser in the state. Interestingly enough, what you're missing from the picture, financial institutions. So there's a governing body policy, there's appraisal foundation, there are the states, but the financial institutions like Wells Fargo are not part of this inner circle or these concentric circles. Where we get our where we are connected is that the OCC enforces regulatory requirements to the banks that relate to how we coordinate and go about appraisal. So I mention this because as we move forward with projects like Project Reach and Project Pave that you may have heard about, that's when the banks are now at the table helping to share our perspectives, feedback, and insight in terms of how we would recommend change in the appraisal industry. So I wanted to reflect on this page so you can get appreciation for how the model is actually structured. If we go to the next page. So some key stats, and these are some grounding points that I think are perhaps quite telling. So if you look at the Bureau of Labor Statistics, 92% of the appraisal population today is white. I think it's by far, if not the worst, it's one of the lowest in terms of diversity. Okay, and when you think, so 4.2% Black, 2.7 Asian, and 7.8 Hispanic or Latino. In case you're checking the math, the 7.8 is not considered, you know, a race, so that's why it doesn't equate to 100%. But the point is that, to my earlier statement about how you become an appraiser over the years has sort of resulted in what we have today, right? 92% white, because of the communities that are actively involved, those that have been in a profession and bring those in sort of that reflect, you know, themselves. 78% of the certified appraisers, this is 2029, I don't think it's improved that significantly, 78% are male. And then another challenging statistic in this industry, and this is again 2019, so it's aged four years or so, 71% are older than 50. So this industry overall is looking at some challenges ahead, perhaps some rationale as to why we have certain issues we're dealing with as industry players, both, and we have that, we have some issues, you know, composites of this within our bank and other financial institutions, but we need to address the aging, we need to address diversity, and we need to address gender, right? So I'll tell you about a little bit what Wells Fargo is doing in that regard, but the characteristics of the industry help to, well, facilitate the fueling of potential appraisal bias issues. One, maybe there's shared incompetence like any other function that the folks just don't do a good job. But two, the optics of individuals that are serving the communities in which the appraisals are needed. And if an appraisal comes in lower than expected, it could be a reaction that's taken. That could be founded reaction or unfounded reaction. Okay, so I just wanted to share that with you in case there wasn't any prior history. Again, there's the two other bullet points are sort of endemic into the industry, not necessarily appraisers, but this is work that's been a focus area and need for change. And there are a number of initiatives underway, public and private initiatives, to help address the fact that, you know, the appraisals of certain neighborhoods are 1.9 times more likely to be appraised under contract price than a white community. And the more telling statistic for me is the loss of wealth as a result of underpriced or undervalued properties, which is the last bullet point. And the numbers are growing, but at $150 billion. So, you know, these are stats that we in the industry and Wells Fargo are taking near and dear and trying to put change in place and influence the industry sort of as we move forward. Okay, so with that, I will let me just say a few things. So with respect to the 150 billion gap, there are several different, you know, public and private partnership initiatives that are underway. I cannot, the role I sit in and the organization that I lead, I don't get directly involved in lending. In fact, there's a wall between the home lending side of the business and the appraisal side of the business, rightfully so that there's no influence one way or the other. But on the lending side, I can say that my colleagues at Wells Fargo are doing a couple of key things. One, Wells Fargo has helped more than 400,000 Black and Hispanic families achieve home ownership goals to the tune of $110 billion in financing from 2018 to 2021. Wells Fargo has allocated over $500 million to help address the housing affordability crisis that I know all of you as mayors of key cities are looking at specifically. And then we have launched a special purpose credit program for eligible homeowners, predominantly Black and brown families, to achieve, to access low financing rates, which are even more important in the environment that we're seeing today. And lastly, we have just announced $100 million of advanced financial equity program that we're rolling out with the National Urban League to help advance the progress in terms of home ownership for Black families. So, you know, Wells Fargo continues to put a best foot forward in terms of helping to make a difference in the industry and helping to move the needle. I should also say, and I've now with Wells Fargo for 17 months. I previously was with another financial institution for many, many years, but the commitment to the Black and brown community is extensive. We have been the largest bank lender for home mortgages for Black families up, you know, through 2020, and I think it continues to grow. So we don't necessarily say that all the time, but when I look at the stats as someone from the community itself, these are important stats that I anchor to, and I see the commitment from the organization. So if we go to the next page, I'd like to share with you now more directly the things we're doing within my organization. When I came into this group and I spent some time with the talented team we have at Wells, looking at opportunities, not only to just, serve our clients, but really to make changes in the industry. There are certain revealing aspects that I recognized, and again, coming from the community, I'm quite sensitized to it. And that is what I said before, like the stark difference between races within and ethnicity within this profession, and how we get young, talented Black and Brown individuals into this industry that's a strong industry, just needing of change. We've done a couple of things. And I should say before I get into that, also recognizing that appraisal bias itself continues to be more well known in terms of the examples that come out in the press, the concerns in the community around what appraisal bias and impacts can do, and the recognition by the regulators and the policymakers that we need to make some changes right across the industry. So we've taken our steps. One, within our organization, within my organization that runs both commercial and residential, we've put our teams through extensive additional DE&I training to ensure that from our perspective, when we receive input from the market, that we're very cognizant of micro inequities and things that may appear on an appraisal that makes you think and alerts you differently than perhaps you would in the past. Competency training. From our perspective in my organization, when we look at what we do, we don't necessarily make appraisal bias a first cut. We want to ensure that all appraisals are credible and reliable. If it's not credible or it doesn't look reliable, we want to take the next step down and say, what's driving that? Is it because the appraiser just didn't do a good job, that didn't pull the proper comparables, or that they just are not fit for purpose and we should consider not using them in the past? We use a lot of external vendors in this industry. Or is there something that's triggering some other concerns like appraisal bias? And I'll talk a little bit about that in the next 2 bullet points. So what we did at Wells Fargo, and I'm really proud of, hope you are, we launched an associate appraisal program to bring new, talented, diverse appraisers into the industry and into our company. And we did that with success. We have 93% diverse associates that are ripe for graduation. So meaning they're getting their licensing now, which has helped us raise the bar internally. And I've also showcased that to my competitors, my colleagues in other organizations. And they're looking similarly at a program to help uplift to the aging population and also diversity. The second big thing that we've really tackled goes back to my first page, and that is, how do we incent senior appraisers that look different than the up and coming and the Black and Brown community that wants to get in this industry? So we went to our Wells Fargo Foundation and shared with them the dynamics of this industry and the need in this industry, and they approved a $5 million program over the next 5 years in partnership with the National Urban League to incentivize senior appraisers in the market to actually take on apprentice appraisers so that they can grow and develop and not necessarily have to come from their community, right? So we've launched that, and Mayor Dickens and Lyles and Turner, I'm very pleased to share that we're launching our program in Atlanta, Charlotte, and Houston to attract these new appraisers, new diverse appraisers to the community. And then we're working with the National Urban League to roll that program out nationally. So I'd love to stay in contact with you, let you know how that is going, get your feedback as we move forward. And then further in our organization, in terms of going back to specific appraisal diversity and appraisal bias, we are building intelligent automation models, AI models, artificial intelligent models, to help us do a better job identifying potential appraisal bias versus just basic keywords that may show up in the appraisal, like black, white, Chinese. So inappropriate, unnecessary terms that, to the naked eye may flag some concerns, but we're actually building models that can help us more drive the outcome with the intent, right? Where there's a discrepancy that the model will be more sophisticated than us with two eyeballs kind of identifying. So we're putting that in place to help ourselves get in front of a potential situation. And when we catch that, we take the appraiser off of our list. And depending on the grievance or the issue that surfaces, we report them back to the state in terms of our findings, and the state flags that individual. We were also working with our home lending group to ensure that homeowners and new buyers understand their rights to have reconsideration. Meaning, if you don't think your appraisal comes in where the value should be, there is a right to request reconsideration. And I think this is probably not well known to many, and therefore it becomes an escalation to whether it's public or within their community. But consumers have the right for reconsideration. Reconsideration should take place, and the financial institutions can get back to ensuring that the appraisal properly reflects the value. It may not always change because the value and the assessments may be correct, but we want to make sure that there is no other implications there and that the value is what it should be. And the other area we're focused on is ensuring that we have enough diverse suppliers in the industry. So in my organization, I have on staff about 120 appraisers that we maintain on my residential side, but I utilize about 5,000 appraisers throughout the industry that are, if you will, they work for appraisal management companies. They're contractors. All of the financial institutions have either a complete model that uses external support, or some have a hybrid model like we do at Wells. But what I'm getting at is that we have to help influence those organizations to change and do the things we're doing, like what we're doing at Wells Fargo, to keep step with what's necessary to be better in this industry. And we want to anchor to finding more diverse suppliers in this program than we have today. The one other component I want to reference in terms of the relationship we have with the National Urban League, as part of that $5 million commitment, because so many of the appraisers are entrepreneurs, they actually run their own business and are independent contractors. We're also funding training of entrepreneurial training, how to run small business. So I think the coupling with bringing in new, young, diverse talent, getting them the licensing, and affording the ability to take the appropriate training to start their own business will start to make a difference in what we do. And this is not exclusive to Wells. Our intent is to go to the JP Morgans, to go to the Citibanks, to go to the B of A's. And this is not about us, it's about the industry, and bringing in those partners to pony up and contribute like we have, so we can all collectively make a change as we go forward. So I just wanted to bring some of these points to your attention, share with you what we're doing both from a Wells Fargo perspective and through the industry, and take feedback and embrace your updates as we go forward. And I'm happy to meet separately to go through more details specific to your state. Should you?
Thank you so much. Hi, I just want to ask, we do have some questions in the chat, and so thank you so much for that presentation. And I'm just going to ask them just kind of in order. There are three, so if you need to reference them as well. Mayor Jackson from Beverly Hills, Missouri asked, what what direct programs are you sponsoring or supporting to deal with the devaluing of housing stock in Black and underserved communities?
So what I mentioned before, and it is some of the programs that our home lending teams are doing in terms of supporting with low interest rate programs, commitments with the National Urban League to fund the underserved community. In fact, the home lending strategy has just been rolled out to contain parts of our home lending growth and focus on diverse segments in particular. And then what I mentioned within the diverse appraisal world, it's the programs within my shop in terms of bringing in new talented diverse appraisers, giving them access to the industry, where I think it was limited before, and working with the National Urban League again to help us roll out this broader program industry-wide.
Okay, we've got a few more questions, but we also want to respect time. So what we can do is make sure, mayors, to connect you to Wayne. His contact information will be made available, and we'll also share some information with you in the LinkedIn chat. Wayne, we certainly appreciate your outstanding presentation. And thank you so much to you and the Wells Fargo team. We will now begin the second.
Thank you very much, and I appreciate the invite. I appreciate it very much. Take care now.
Thank you. We will now begin the second half of our session, continuing the discussion about appraisals and introducing the best ways to maximize land use. We are joined by two industry giants today. We've got Robert Bob Hughes. He is the current vice chairman, a licensed appraiser, and past president of NARAB's appraisal affiliate, and is an experienced affordable housing developer. We also have Mr. Wilbur T. Peer joining us again. He's the Chief Operating Officer of the KKAC Foundation. Mr. Peer Sr. is the Chief Operating Officer at KKAC, a senior partner at the Management Solutions Incorporated, has ownership in a row crop farming operation, and has over 40 years of experience in managing projects with universities and federal and state agencies. Please welcome Bob and Wilbur to the Economic Mobility Leadership Institute. Thank you both for being here today, and we'll just jump right in. A 2021 study by Freddie Mac found that Black and Latino homeowners are about twice as likely as whites to get low appraisals. We just heard something similar to that from Wells Fargo. But according to the Freddie Mac report, 12.5% of the properties in predominantly Black census tract areas received appraisal value lower than contract price. Bob, can you share with the cohort what NARAB is doing to address this unfortunate reality for Black and Brown communities?
Thank you for the invitation, honorable mayors. Glad to be here. I have to let you know, first of all, I came off the bench for this presentation. Our President-elect, Ms. Courtney Johnson Rose, was slated to be here, and of course, she's a very busy, accomplished woman, and she found herself double booked. And as we, the members of NARAB, so often find ourselves, we get some last-minute calls and say, "Hey, we need you to step in." So I'm here, and I appreciate the opportunity. Let me first describe a little bit. I know you had a blurb or two about NARAB, and of course, we've been around since 1947. People understand that civil rights, I know we on this call understand the civil rights movement didn't start in 1960s when it became televised. Back in 1947, we certainly weren't starting a new civil rights movement, but we certainly needed to deal with those things that affected Black families in the real estate world, affected Black practitioners in the real estate world. So we became one association that we could network as Black real estate practitioners and advocate for democracy. Our mantra of democracy and housing is one that we carry to this day. When we celebrate our 75th anniversary, I should have a background behind me as I speak, and so my people will be very disappointed I don't have a background that says 75th NARAB anniversary behind me. But now let me also bring it to the point that the National Society of Real Estate Appraisers also started for this same reason. 1956, the National Society of Real Estate Appraisers was founded. And we also were founded for the role of networking in our specialty field of appraising, as well as the advocacy. To this day, NAREB works for those same two missions to broaden diversity and equity. I'm glad this term that is being thrown around now, diversity, equity, and inclusion, makes sense. It made sense to us 75 years ago. So I just wanted to point that out. And now, you know, the light is shining bright on racial bias and appraising. We've gone through a bright light shining a few years ago that was Black Lives Matter. And I want this to happen, this conversation, to keep going and not to let this light go out, because racial bias in appraising, just like civil rights didn't start in the 1960s, this has been ongoing. Someone shined a light on it because there was a lawsuit that hit the newspapers. I do want to commend the presentation that Wayne just gave. It was certainly a very broad and very specific understanding of the appraisal world, how it's morphed into being regulated by the Appraisal Foundation, the subcommittees. And so I think, you know, I make no comment about that. I commend Wells Fargo, NAREB, and Wells Fargo has been a very strong partner and in relationship with NAREB. And I also commend the Wells Fargo for making contributions to the Urban League, both in the broader sense of helping Black America and specific for helping produce more Black appraisers. I would like to say, however, and with no indifference to Wells Fargo, I truly believe that if we want to talk to Black appraisers and Black entrepreneurs, the National Society of Real Estate Appraisers, which is an association of Black appraisers and Black network with Black appraisers, should be prominently included in this process. We would be more than welcome with the incentives and ability, financial ability to do as Wayne indicated. You know, that's a burden that's placed upon a senior appraiser to take on an apprentice, both time and financial. But we, the National Society of Real Estate Appraisers, and our members have been talking about this. How can we make this happen for growth in our industry, specifically not just the aging out of appraisers, the aging out of Black appraisers is certainly even more prominent, given that we only start with less than 5% of the whole appraisal industry that's represented by Black appraisers. This is very, very, we've tried to create programs with our HBCUs, along with NAREB doing the same thing. We'll continue to work with that. We're working with limited resources, limited number of volunteers, because we try to run our business also in the meantime as we volunteer to advocate for the needs for the communities, for the users of appraisers, and for the practitioners that are wanting opportunity to get appraisal assignments. So I hope somewhere in this rambling, I've answered some questions and put some light on what NAREB stands for and what the National Society of Real Estate Appraisers stands for.
Thank you. Thank you. That's very nice. And I noticed we saw President-elect Rose pop in there for a second. I wanted to ask you in our last few minutes, can you tell us what are the top 3 things a seller should do to make sure they get an accurate, good, or fair appraisal? You may have heard us as we were speaking. Our mayors are putting together strategic plans that will include events within their municipalities and help them with the issues we're talking about. So many of our mayors are having home ownership seminars or fairs where they reach out to people. So what should a seller do? What are the top 3 things a seller can do?
Madam Rose, you want to take this? I would like to tell you something that is realistic. I am a broker, and Madam Rose may specifically speak to this. We tell our agents to tell our sellers to take all ethnic pictures and all ethnic references out of their, or put them in the closet, and that's just being real. We find that that is an influencer, both in terms of a buyer as well as an appraiser. Now, that's not necessarily everyone, but over the years, we have found the necessity to do this, and it's just reality.
I would add to that, and thank you so much for having us. We appreciate this relationship with the AMA. But I would add to that a seller to prepare themselves, know your numbers. Talk to a realtist member, one of our members ahead of time. So know before you put your property on the market, how much it's worth. Have your comparables. I'm a broker in our local market, and when I show up to the appraisal meeting, I show up with comparables. I let the appraiser know that I already understand the value. I've educated my seller and my client on the value. So when you know what you're looking for and you know that the comparables are out there, it equips us a little bit better to know whether or not we have had a fair appraisal or not.
Very good, very good. Well, we certainly appreciate all of the support we've received from NARAB with our Economic Mobility Leadership Institute. I do know at the conference, we were able to match up, I believe, all of the mayors with their regional NARAB representatives. So mayors, if you did not meet that person or if you need their contact information, please let us know and we'll make sure to connect you.
Thank you so much for that, Stacy.
Thank you.
Thank you.
A key component of the EMLI mayoral cohort is to create a strategic plan that incorporates the financial tools for the constituents to improve their financial standing, protect assets, and create generational wealth. Land is still a rich commodity that allows families to maximize income opportunities and pass on resources to future generations. So today we have Mr. Wilbur T. Peer here. And Wilbur, I suppose there are many, many aspects of land ownership that you could discuss, from acquisition to paying taxes, adverse possessions, squatters, foreclosure. But today we want to highlight specifically, how do landowners maximize land use? So I want to set up two scenarios for you, sir. Maybe time one, we have some land and the area around that land is starting to be developed. We don't want to sell our land, but we want to get in on the action. What can we do? That's the first scenario. And the second scenario, Wilbur, would be, let's say I inherited 12 acres of land from my grandmother in another state. What's next?
Good morning to everybody. So let me put a disclaimer in, Stacy. I primarily deal with rural areas. However, I think what I'm going to talk about I hope some of what I say will answer your question. We work with federal programs, particularly in the historically underserved communities. And what we found out trying to help educate our Black landowners and farmers about federal programs, 95% of the land is tied up in heirs property. So we've kind of shifted our focus now to deal with heirs property. And why is that important to us is because in 1915, 20 to 30 million acres of agricultural production land was owned by Black people in this country. Now it's probably around 2 million acres. But more importantly, 30% of the land that we lost because we do not do proper estate planning. So we concentrate heavily on helping people to clear up heirs property issues and make wills and trusts. Well, I spoke to the National Baptist Convention in January in Birmingham, Alabama. And what I said to them, somebody today that's Black in America is being buried without a will or a trust. So we're losing wealth. Every time that happens, we lose wealth. But I always say sarcastically in our community, when somebody dies, let's sell it and give me my share, as opposed to properly transferring our wealth from one generation to the next. That's what I said to the Church of God in Christ Board of Bishops in Chicago, is that it's not enough for them to tell the parishioners that in the Bible it says a good person shall leave an inheritance for his children's children. You have to tell them, show them how to do that. And we put on workshops all over the country where we can afford to help people do proper wills and trust. My mother is 101 years old. We put her property in a trust 20 years ago, so she can maximize the use of the federal aid and state aid. And people that do not do proper estate planning lose wealth because if they have to go to a nursing home, it's a 5-year clawback and they'll lose the wealth. You all in the urban centers, I'm sure you all have people that you know who own property in rural America. What I would advise you to do is have them to go back and get to know their family members. Identify where the land is. We got a worksheet, and Stacy, I want to, if you will put your email address in it, I'll have Destiny email, give you all a worksheet on what you need to do to start trying to clear up heirs property issues. And what I say to our people when we're talking to them, stop seeing yourself as a victim. There are things that we should be doing for ourselves. And that is, if you own a pair, as one of the lawyers I work for, if you own a pair of red shoes, tell the world what you want to happen to your red shoes upon your demise. So if you own a house, do a beneficiary deed or create a trust. If you got a bunch of heirs that own 100 acres of land, if you get a majority of the heirs, you can create an LLC and put it, just properly transfer our wealth from one generation to the next. I think that in order for us to get away from feel like we are just discriminated against, we got to start owning our own resources. And to me, the oldest structure known to mankind in the world is the family. And we must come together as family first, because that's how we lose land, because we fight amongst ourselves. I know a gentleman now that he's dead out in California, had a pretty healthy estate, but they still in court fighting. They in court fighting. So, Stace, I'm sure I probably didn't answer. I could talk about what we do in terms of the best use of land, and I'll do that just briefly. So in rural America, if you owned 100 acres of land, particularly here in Arkansas, and you wanted to get out of production agriculture, the government will pay you $3,800 per acre to take it out of crop production. You still own the title to the land. Then they would spend another $500 or $600 per acre planting trees on the land, restoring it to its natural habitat for wildlife preservation. That's your land. You can sell the land. You can lease the land to duck hunters once the trees start growing. The other thing in the new farm bill, the 2023 farm bill, they're going to have in there some aspects of carbon credits. When the trees grow up to a certain size, probably in 2 or 3 years now, you'll be getting $200 or $300 per acre for the carbon credits on those trees. That's called the Agriculture Conservation Easement Program. And that program is in every state in the nation. The second thing is that if you own production agricultural land, there's another easement called the Agriculture Land Easement. The government will pay you to guarantee that that land will always use for production agriculture. That prevent developers from coming in and developing that land for industrial or commercial use. So those are some benefits. It's what I tell people, there is a lot of money in these government programs, but what we have to do is study and attend seminars like what you all are having here. And one of the things I want to say to you mayors, the U.S. Forest Service has something called the urban forestry. They're going to spend $1 billion. And I would advise you, we will put a link in the chat, email a link to the urban forestry and the Inflation Reduction Act. They're going to spend $1 billion in urban forestry. The other thing, as it relates to NRC, as the Natural Resources Conservation Service, they got a program called the Emergency Water Protection Program. So if you're having flooding in your municipalities, and it does not have to be declared a natural disaster, NRCS will pay to remove debris, restore the eroded stream banks, correct damages, we will put that link in there. And they now will help the municipalities purchase the land in case somebody need to move. And that's called the Emergency Water Protection Act. And finally, those of you who live in urban centers, NRCS have something called the HAT tunnel, the urban gardening. They will give you a grant to help you develop a HAT tunnel. And you can become an urban farmer. All you would need to do is go to the Farm Services Agency and get a farm number for that lot, no matter where it is. So those are the kinds of things that we're doing to try to help preserve wealth. And the reason we started with the Agriculture Conservation Easement Program, people were selling their land for $1,800 an acre here in Arkansas, when they could have enrolled it in the Conservation Easement Program and got $2,100 an acre for it. And that price has gone up now. So we're saying, come talk to us, let us create options for you. And I'll stop. It seems like I'm rambling, but those are the areas that we are concentrating our efforts on now.
No, I really appreciate that. That's fantastic. I have a question for you, and we'll open it up for questions. We have some time, but we'll start with the question. You said that you guys have been lecturing and reaching out to communities to tell them about these programs. If mayors wanted to incorporate this information, then would they come to you, or would you recommend they reach out to the government agencies?
We will put out, certainly you can call us because we get funded by the Walton Family Foundation, the Nature Conservancy, the government. So even though we do rule, wherever people call that want us to talk to them about proper estate planning, we will go, because what I think we need to do as a community, we need to have a cultural change in our community. And that is, we must focus early on in our children's lives about proper estate planning. Let them know where all of your paperwork is. Make wills and trust. So yes, we will talk to people anywhere. I got a grandson graduating from college on Saturday, and I was supposed to be speaking at the National Baptist Association meeting in Jackson, Mississippi. But we are sending somebody. So wherever people are, if they reach out to us, we will either refer them to one of our partners or do it ourselves.
Is it best for them just to, do you want us to share your contact information and have them contact you? Or how would you like to do that?
We will share our contact information. We think it's so vitally important that our community focus on estate planning till we probably spread ourselves too thin. But I think we have to stop blaming everybody else and just work extra hard to make sure that we do what we ought to be doing for ourselves. So did you put it in there, Destiny? Anyway, listen, our organization is the KKAC organization. That KKAC stands for my grandchildren. All you got to do is Google us and our information is online. Caleb, Corey, Andre, and Cole. And that's a whole nother story. I'll tell you how we got that one day.
We will also make sure to make your contact information available to the mayors. We'll also circulate some of these programs in our LinkedIn group, mayors, to make sure that you're familiar with everything. Do we have any questions for Wilbur in our last few minutes?
I have one, I put it in the chat, but I'll ask him directly. I have a woman with a significant amount of land. I think she's 84. She has a significant amount of land in Helena, Arkansas. How can you guys help her? Because her family some of them are helping, trying to come up with things to do with the land. But we need somebody with the level of expertise that you have to get that family together. And you talk to a few other families that I connected you with before. This is Mayor Jackson, City of Beverly Hills.
Right. Ask her to call us and we will set up a time for her to do a Zoom call with us if she can come into the office. I will even go over to the family. We're going to put a We're gonna email you, Stacy, the worksheet, what people should be doing for themselves before they call us. You know, we got a checklist. Do you have a clear title to the land? Go to the courthouse and get the last known person that's on the deed of record. And then develop a family tree. And then see who all have ownership interests in the land. There are some things you should do before you even go to a lawyer, come to us, and we'll put that in the email that to Stacy, and she can get it to you, Mayor Jackson.
Okay, good
Or if
deal.
you put your information in there, we will email it to you directly.
Thank you.
But we'd love to help her. That's what we do.
Very good, very good. Well, we have come to about the close of the end of this particular session, which is amazing. We have come mostly through our EMLI sessions. After this, like I said before, we'll have 2 more. And then you guys will be expected to implement these fantastic plans. Thank you to everyone for joining us today. We've recorded today's session and we'll make it available online. You will be able to see the links for the products discussed today and also in the EMLI LinkedIn group. Special thanks to our partners at Wells Fargo, NARAB, the KKAC Foundation for closing out our session around land usage and appraisals while Black. Our next session will be on May 25th, focusing on our economic mobility catalog. Be sure to follow us on social media at Our Mayors and visit us online at ourmayors.org. Thank you for joining us today, and this concludes our session. Have a wonderful day.
Thanks, Steve.